We all know Visa. We probably all use Visa every day. And every time we do, Visa gets just a little bit of money. And when we add all those little cents together, we get over $89.5 million every day for 365 days a year. That is over $3.7 million per hour. But usually when something seems too good to be true, it probably is. But maybe Visa is an exception. Let's analyze it and see not only how good this company really is, but let's value it and see, can it be a good investment? And can we get just a small portion of those $3.7 million every hour? First, let's take a look at the recent results. We see that in the last year, revenue went up by 11%, net income is up by 15%, cash is up by 3.8%, and the debt is up, so that is not ideal, but only by 1.3%. So these results look really nice. But let's keep on going. Maybe we will find a reason not to invest. If you were to invest $1,000 into Visa 10 years ago, you could buy around 20 shares. And today, they would be worth something close to $4,878. And let's not forget about the dividends. Through the 10 years, you would receive $202 as dividends. So if we add the current value of shares and the dividends, we get $5,080. So that is a gain of 408% in 10 years. That is a great result. The only problem with it is that the future does not have to look anything like the past. So let's analyze Visa to see, are such returns possible in the next 10 years? Individual insiders, that is an X. Only 0.04% of the company is owned by individual insiders. And we would like to see this number over 2%. So unfortunately, the management does not have its skin in the game. And are individual insiders buying? That is an X. We see only sale transactions in the recent months. And do super investors own this company? That is a check. 24 super investors own Visa. It is actually the fourth most owned stock by super investors. And just to name some of them, we see people like Chuck Ackrey, Terry Smith, Thomas Geithner, Lee Ainsley, and Warren Buffett in this group. And are super investors buying right now? That is an X. In the last 2 quarters, they bought 1.3 million shares and sold almost 3 million shares, so over twice as much. Return on invested capital, that is a check at 20.5% 10-year median returns. And we like to see this number over 10%, so that is a very nice result. It indicates that the management is doing a really nice job. And since February 2023, Visa actually has a new CEO. But because he's promoted from inside the organization and he was a president of Visa since 2013, I don't think we can expect any drastic change to the business. And free cash flow growth? That is a check at 22.7% 10-year compound annual growth rate. And also here, we want to see this number over 10%. So that is a very nice long-term growth. And what do we know about net profit margin? It is a check at 52.9%, and the industry average is 32.3%. So that just shows how strong this company really is. It has a massive moat. And now let's take a look at share buyback. It is also a check with minus 35.3%. So that is absolutely beautiful. They are reducing the number of shares. So long-term investors are becoming owners of a bigger part of the company simply by not selling. And the management just announced that it is planning a multi-year $25 billion stock buyback program. So this trend can continue for some time. And let's take a look at the debt. It is a check. It would take just 1 year to pay the long-term debt with a current free cash flow. So it's checks all around. Visa is one of the few companies we analyzed that has such an incredible financial health. The dividend yield is 0.85%, so shareholders can expect $2.08 annually per share through dividends. That is not a lot, but it seems that Visa is adding value to shareholders mainly through share buybacks and not dividends. And how is the payout ratio looking? It is a check at 21.35%, and we want to see it somewhere between 20 and 50%. So even though the dividend yield is not very high, it is a very healthy dividend. It is just over 20% of the earnings, so it's substantial, but at the same time, it's small enough not to cause any problems for the company. They still have plenty of cash to grow, to pay back debt, or react to any surprising events. And what do we know about the dividend growth? It is a check at 16.27% 5-year growth rate, so that is very nice. The dividend is growing every year since 2008, and just recently the board of directors increased Visa quarterly dividend by 16%. So this growth seems to be pretty stable. Price to earnings ratio is 29.3, so that is not cheap. But then again, what should we expect after such great results? But to properly value it, we will use a discounted cash flow formula, and we will estimate the growth of Visa for the next 10 years. And as always, we will make 3 scenarios of this growth. So in the low scenario, we will estimate a growth of 10% for the first 5 years, and then 8%, in the medium 12%, and then 10%, and in the high scenario 14% for the first 5 years, and then 12% growth. Now, why did I use such estimates? Well, the high scenario is basically what analysts predict. So we want to be a bit more conservative with our medium and low scenarios. Also, if we look at the 10-year annual growth rate of Visa, we see that the revenue went up by 10.7%, free cash flow by 22.7%, and earnings per share by 15.9%. So it seems that we are rather on the conservative side. And with such estimates, the intrinsic value in the low scenario is $257, in the medium scenario $298, and in the high scenario $345. But these are not the prices we should be looking for, because we have to always add a margin of safety. I use a 30% one. So with such a margin, we get in the low scenario $180, in the medium $208, and in the high one $241. And the current price is around $245. So it is all green without the margin of safety and all red with it. But the high scenario is not that far off. It seems that Visa is somewhere close to fair value at the moment. I honestly don't know what to dislike about this company as an investment. Financial health is spotless. Dividends are stable. They are buying back shares on a massive scale, which can indicate that they also believe that the price is fair. There may be other better investments, but if we are looking for a great, secure business that still can grow in a meaningful way, then Visa is something we should probably consider. Thank you so much for watching and see you in the next one.